Okay, I'm going to share with you a very easy strategy, how you can go about just earning a quick $400 within 2 to 5 minutes trading the future markets. Okay, it doesn't matter if you're trading the Nasdaq or the ES futures or the Russell or the Dow, whatever is your indice of choice that you actually trade. Okay, uh, I'm a scalper and like many other traders out there, but the goal is really to identify and find high probability zones on your charts. Now, this all surrounds supply and demand style trading. So you should be able to, within 2 to 5 minutes, be able to be in and out of a trade. And you can easily make $400 plus or way more than that, depending on the number of contract or size that you're actually trading, whether it's the micros or the E-minis, but I'm specifically talking about the E-minis today because you could trade one contract, say for example on the Nasdaq 100, and in 2 minutes pick up those quick $400. But again, I always talk about one of the most important things that you need to follow and understand the concept is market structure. So first and foremost, what we want to identify is structure in the market, correct? So whenever we see the market making higher highs and higher lows, and that just means that it is trending or moving to the upside and breaking structure until we get some means of a reversal to where the market starts breaking through structure on the downside and making lower lows and lower highs. So for example, I want to show you a quick setup here, in specific this zone right here. And I'm also going to talk about something that is very important, and that is relatively the idea of looking for fresh zones, okay, ones that are not. So when you're trading and the market's breaking structure, you're not looking for a zone where it took hours or days for it to come back to. The newer the zone, the fresher the zone, the higher the probability the trade is probably going to work out. Now, again, I'm typically looking for trades between the hours of 7:30, 10:30, 11ish. I'm really cutting it off, but I'm only looking for maybe an hour or two of trading hours out of the day. Okay. So, and I do not like to stay in trades for a period of time. Again, okay, 2 to 5 minutes. I'm hoping the market with momentum pushes in either direction and I can capture, a profit fairly quickly. So with the Nasdaq, I always talk about picking up, 20 points, and it's pretty easy because 20 points is 80 ticks. Okay, so you do that times, the number of contracts times the actual tick value of that particular market. In particular, we're talking about the Nasdaq 100, and then you'll see how quick you can capitalize on making funds trading. So in this area right here, we can see where the market was making higher highs and higher lows, but then we started breaking structure to the downside. All right, you can see that. All right, making a low, lower high, breaking structure lower. But you have to always identify and be on your P's and Q's because the market can always turn direction at any given time. Like right here, it made a low here, right, after breaking structure lower, but then it makes a run back to the upside. And the thing about trading is that a trend can be very short-lived, okay? It could be a short-term trend. It could be where the market is moving to the downside, like right here, breaking structure, and then we get a structure break to the upside, all right? And then it comes back to this area of demand, say for right here. Is the market finished moving to the downside? We don't ever really know that. We have to trade based on what the market is doing, in the current session. So when the market starts making moves to the downside, making lower lows and lower highs and breaking structure like below this area here at 19,675, then I'd say, okay, I'll be looking for areas for short until it starts breaking structure in the opposite direction. So we get a push up, a pullback, breaking structure above this area here, aggressive buying to the upside, and that is one of the things I love to see is where there's aggressive force to the upside with lots of buying. And then specifically where this is a higher base chart, 120 range. I always start off marking my zones on a higher base chart first. Then I wait for a pullback to a key area of either supply or demand. In this case here, demand, okay? The strategy which I'm showing here is the same in reverse if you're taking trades at supply areas. Mark up the zone off the higher base chart. Wait patiently for it, patiently for it to come back to the zone right here. And then we're looking for rejection on a lower base chart. I'm not taking a trade off of a higher base. This higher base 120 range chart, I'm looking for rejection right here when it gets to the zone, and then I move down to a lower base chart. Again, I'm aiming for at least my 20 points and possibly a runner if I can, depending on what the market is doing. But most contracts take off at 20 and then maybe leave a runner, okay? Unless you see the market start to, if you're in a trade, start to come back against you in a sense, to where it is not relatively, it's not ready to move in that direction. You want to see momentum step into the market. If I'm looking for take a trade here, I want to see buyers. I want to see momentum step into the market. If not, it breaks and I get the close of a candle on the lower base chart, and then it turns back around and starts to close with one candle, two candle. Then I'm gonna go ahead and get out, because it could be a sign that they are faking you out and that the market wants to move in the opposite direction. But most times, if you see the market break in structure, which is one of the key identifiers first that you want to see, and then the market pull back, go ahead and mark your zone off, demand zone here on a higher base chart, and then it comes back to the zone. Then we just move down to our lower base chart and wait for the projection. But we need to see or find an area of demand on the lower base chart just as well. Now I'm on my 24 range chart, and all you have to use is use two charts, a higher base chart and a lower base chart. I trade range base charts. I'm gonna tell you right now, I don't know what time based charts are equivalent. People always ask this question. What charts are equivalent if I trade time-based charts in relation to the range charts? They're not, okay? Because both are calculated differently. Range charts are calculated, range bars calculate differently than time-based charts. So please, that question is irrelevant in a sense. I mean, you're not going to find, you may find, a time-based chart to where it kind of looks similar to a range-based chart. But again, range bars move based on volume in the market, okay? Time-based move based on as a time period. As time has passed, whether it's 5 minutes or 10 minutes, that candle's going to close, okay? Open and close. So again, the two are, you're not going to find one chart that's going to mirror the other, or one style of chart that's going to mirror the other. So anyways, when the market pulls back, I'm on my 24 range chart here. The market pulls back to this area right here. The larger box is from the 120 range demand zone that we marked up. Okay, all this is confluence and finding confirmation using two paired charts. Okay, the second chart I'm using is my 24 range chart. The market comes back, taps into the higher base 120 range demand zone. So then I'm looking for, okay, is there a demand zone basically within that higher base 120 range zone? That's why we have a box or a rectangle within a rectangle. The larger zone again is the 120 range zone. The smaller one that's inside that zone, the larger zone, is the 24 range demand zone. Now, when you get two zones in confluence with one another, where one is, especially the smaller zone is within the lower base zone, the smaller lower base zone is within the higher base zone, then that's going to raise the probability of the trade working out in your favor. So we get to tap into the higher base zone here, okay? But we don't, I look to my left and I don't see where there is a unmitigated smaller zone on the 24 range chart. So it moves a little lower, and then there's one right here, okay? As you see here, this was a demand zone, okay? There was a break, a structure that occurred right above this area here at 73. And there was a demand zone resting within that structure break here, okay? This little swing right here created a demand zone. So the market taps the higher base zone, comes into the lower base zone, wicks at it, and then all I'm doing is looking for the break and close of a candle to go long. Aiming for first 20 points, and then either taking out all positions or leaving one as a runner. So you're going to get into the trade right here at the break of and close above this last down bearish candle right here at 19,661 or 662. You get in and then you aim for, you can see immediately it pushes up with momentum to the upside. So 82 is going to be the sweet spot to where we're going to pick up our 20. And as you can see, the market gives a whole lot more than that. It goes all the way from, if you got in here at 62 or 61, it goes all the way up here to 727. All right, so there's a lot of points that kicked off right there in that one trade using chart confluence. This is how you can kind of increase your win rate over time and keep a high win rate if you are looking for confluence. The more confluence you have on your side, the better the trade is going to work out, the higher the probability the trade is going to work out, just using a simple strategy. Again, if you look at the time period in which this trade really kicked off, you say, okay, how much time passed before I picked up my first 20? Okay, well, you got in here, it was 1538. Okay, that's 3:38 in the afternoon Eastern time, and by the time it hit the 82 area up here, right around this time right here, I mean really less than less than a minute had really passed. I mean, the market was really moving at that period of time, and with lots of momentum to the upside. So again, 2 minutes, 5 minutes, you could pick up, that quick $400 because it equates, if you think about it, 20 points times, and there's 4 ticks and a point on the NASDAQ. So that's 80 ticks and just those 20 points right there times 5. Okay, that's $400 on one contract. Trading 2 contracts, 8. So you start doubling up or trading multiple contracts, and that $400 starts doubling up real quick. So just wanted to share this with you guys today on, how you can basically trade the same way, but I'll definitely say back test it. Forward test it, meaning being in demo and simulation. Give it a true try, and not just 1 or 2 chances. Like, give it a try over a period of time. You want to practice it because not everything is for everybody. I will say that, and I know that. But if you have a system that's working for you now, I'll always say this: if you got something that's working, please do not try to fix something that is not broken. If you're making money, stick with that. Okay. If what I'm showing you doesn't work out, all right, then move on. Cut your ties. Find something that does. Anyways, I appreciate everyone tuning in today on Friday. I hope everyone has a great weekend. As well, if you are not a current subscriber and you're watching the videos, please take the time to go ahead and click on the subscribe button down below. Make sure to turn your post notifications on so you don't miss any of the uploads. If you're interested in joining the Discord, the link is down below. It's the first link down below. The second link is to become an elite member for all those that want more detailed information in regards to the strategy and want to see trade setups that I take, ones that I post over in the Discord. It's a private community where I break down these trades, okay? It's only $6.99 a month. Scroll down right below the Discord link. You'll find the link that says become an elite member. Click on that, and for $6.99 a month, basically what you're doing is support my efforts as a content creator, but in return, I'm giving you loads back. Okay, I'm giving you a ton of trade breakdowns where I'll walk you through trade setups so you can grasp an understanding of how the strategy works in these trades, in these setups. Okay, where to place your profit target, where to put your stop loss at, and just giving you the full-on mindset as to why I took the trade while I was in the trade. Okay, but outside of that, I appreciate everyone tuning in. And again, if you're looking to become an elite member, that link is down below. Click on it. You'll see 2 tiers are going to pop up, okay? And then I'm going to end the video. But you'll see 2 tiers that pop up. The second tier is the one you want to choose for $6.99. That's going to give you direct access to that private community or private series of videos, which include the trade breakdowns, the video playlist, and then I did a great video covering market structure, basically like a market structure one-on-one type video. So for all those that are struggling with market structure. So anyways, that's all I have to share with you guys today. I appreciate it. I hope everyone has a great weekend, and please take the time to go ahead and click on that like button if you found value in today's video. Take care.